Thanks, Ezra. So at the risk of you wishing that I hit the snooze button instead of Dean, let me present some findings from some research that I undertook with Tabnit Suri, who's a colleague of mine. She's at MIT. She's Kenyan, so provided not only all the empirical and theoretical and technical knowledge into this paper, but also the content. So this research took place over a 3 or 4 year period from about 2007 to 2010, and started off with the problem that many Kenyans face and continue to face. That is how to send money from an earner who typically resides or often resides in a major city like Nairobi, Kisumu, Mombasa, something like this, to family members up country. The traditional way of doing this was on a matatu, maybe, in a bus, which required taking time off work, putting money in your shoe with the hope that no one would check that when they hijacked the bus. And otherwise taking considerable risks in facilitating that transaction. So suddenly a miraculous, and really miraculous in the true sense of the word, event occurred, and that was the creation of M-Pesa. So actually Kenyans had figured this out before M-Pesa came along. They were sending money long distance using mobile phone by sambazing each other phone credit. So I would buy some credit for my phone in Nairobi. I'd send that to my mother in Meru somewhere. She would then find someone who wanted some phone credit nearby and would send it to him or her in exchange for money. M-Pesa simply formalized that process and replaced the person who might want to buy some cell phone credit from my mother in Meru with an M-Pesa agent who was a more reliable source of cash. So the product, as you're all very familiar with, I'm sure, was initially had nothing to do with savings. It had nothing to do with formal financial services as such. Part of the reason was people weren't really thinking too much about savings anyway, but also if it had been called a bank account, then the central bank would have stepped in and regulated it as a bank, and Safaricom wasn't a bank at the time. It might be now. Okay, so the miraculous technology, as Sean mentioned yesterday, was not really the source of the success of M-Pesa, as far as I'm concerned. The success of M-Pesa was the ability of Safaricom to create and manage a deep and wide network of agents. These people who could convert a number on a spreadsheet on a server in Nairobi into cash. And so this agent network grew over time. Here, this is old data now. Currently the number of agents in Kenya is something around 65,000. By the end of, or middle of September, middle of 2011, it was up around 25 or 30,000, which at that time we thought was the limit. Now it's doubled. Okay. So the red line here is the number of agents on the right-hand axis, which grew from nothing in 2007 to 30,000 by 2011. And the blue line is the number of subscribers or customers to M-Pesa, which reached 14 million by the same time. Currently it's more than that. I can't remember what. Okay, so we, our results, our research was based on a household survey of 3,000 households repeated over this 3 or 4 year period. As well as doing a household survey, we actually did a census of agents in the areas in which we had sampled households. Our households were sampled nationally representatively, nearly. We didn't go to the far north. But apart from that, it was nationally representative. And in the areas in which we talked to households, we also did a census of agents. with that, when we talked to the agents, which was later in 2010, we were able to ask them when they opened their operations. And so we were able to basically map the expansion of agents over time in the country. And this is a little graphic showing you that. So this is, I'm going to go from June 2007 to sometime in 2010. And if you just watch the map of agents fills in, basically, over that period. So the story to take away from this is that this map does not show a spreading out of agents from Nairobi to the rest of the country. The first element in this map has agents everywhere. Not many, but they're spread out. And that it was an essential part of the business model, if you like. This product was all about sending money home, sending money a long way. If you had to send money a long way, you had to have an agent in at least 2 places where you were and where you were sending it. So, obviously that's a large fixed cost to incur early on, so this was an expensive capital expenditure to undertake and required some risk-taking on the part of the company. So, our survey of households was similar to the surveys in Tanzania and Uganda that we heard about this morning. Asked a lot about people's financial situations, their demographics, their education, and all that kind of stuff. In particular, we asked about unexpected events. So we were interested in insurance. So let me talk to you a little about formal insurance to start with, which was not a product offered by Safaricom or by M-Pesa. We heard yesterday from Sam Agutu that his company is partnering now with Safaricom to offer a formal insurance product via the mobile phone. But early on, there was no talk at all about that kind of product. This was simply a way of sending money around the place. So life is risky for all of us. In particular, it seems to be more risky for poor people than it is for those who are more fortunate. On the other hand, formal insurance is uncommon. Indeed, there are lots of studies, recent studies by members of this community and others, that show that often households are reluctant to purchase formal insurance. That might be because they don't understand it. It's not a concept that they're familiar with. It might also be because of marketing. So this is a guy that's seen around billboards in Nairobi these days, and frankly, who could blame them for not buying insurance from a guy like that? With all due respect to the insurance company whose name I blocked out here, I mean, he just looks like he's going to take my money and I'll never see him again. But and that's the problem with formal insurance, right? You're giving someone money with a promise that under certain contingencies, which are sometimes difficult to actually pin down, then some money will be paid back to me in some form or another. So that kind of promise is hard to make credible and sometimes hard to keep. However, poor people don't just stop there. They don't throw up their hands and say, oh, the hell with it, I guess I'll be exposed to a whole lot of risk. They find other ways of coping with risk. And informal networks tend to emerge that provide some kind of insurance. In particular, insurance that is provided, be it formal or informal, has been shown to have important effects on people's behavior. So there's some recent work by Dean and others that shows that having insurance can lead you to make different decisions ex ante, for instance, about the riskiness of certain activities you might engage in. So the informal, as I said, informal insurance is provided by networks of families and friends, etc. But that insurance tends to be incomplete in the sense that not all contingencies are covered or not all losses are covered when something bad happens. The usual suspects for that from economic theory are things like moral hazard, which has to do with information asymmetries, etc. Limited commitment, which says that it's hard to tie your hands effectively to continue to support someone in bad situations. Or much more simply, transaction costs. It's just hard sometimes to take money, to send money from one person to another. Okay, so an informal insurance, a formal insurance arrangement says, let's all put some money in an insurance company, and then when something bad happens to one of us, that company will give that money to us. An informal arrangement says, let's not do anything right now, but if something bad happens, we all promise to throw some money into the hat. All promising to throw the money into the hat is a way of is effectively sending money to the person in trouble. If it's hard to send money to that person, then maybe it's not worth it and the insurance is incomplete. M-Pesa reduces transaction costs, so it could effectively improve the efficiency of those informal network insurance arrangements. So there's a little picture, an old one, I'll grant you, of transaction costs associated with sending money around Kenya. The horizontal axis is how much you send, and the various lines are different ways of sending it. Post-pay is the post-bank service, the green line. Red line is Western Union, the black line is M-Pesa for sending between two registered customers. So it's cheaper. That's the only thing you need to take away from this. So despite the current company that I'm keeping, this is not an RCT. Okay, we did a random. We didn't do anything randomly. We did randomly choose households to talk to. So we tried to get a representative sample of households across the whole country. So and we wanted to look at the impact of M-Pesa. Right, if you walk down, the entryway from the gate to the immigration in Nairobi, you will believe that the whole country exists because of M-Pesa, right? Because there's nothing else that you can see, M-Pesa or Safaricom. But what's the impact on people's lives? That's what we wanted to address. The proof is in the pudding. Safaricom makes a lot of money, so someone must be happy. But we wanted to see, well, how happy are people? Like, what's the impact on people's lives? So to address the issue of insurance and whether or not improved lower transaction costs allows these informal networks to operate more efficiently, we did a simple thought experiment. We said, suppose someone's hit by a shock, a bad thing. What happens to their consumption? And we could look at this in the data we collected over time. So here's 2 points. The horizontal axis says there's no shock, right? So this is a good state of the world on the right-hand side. And we look at people who use M-Pesa and people who don't. So we asked them this, have you got M-Pesa? And it turns out that users of M-Pesa have higher consumption than non-users of M-Pesa. That's because they're richer. They're different. They're more educated, they're more urban. As you heard from Anastasia, they're different, okay? So all this says is that we didn't randomize the allocation of M-Pesa usage, right? If we'd done an RCT and randomly picked people to give M-Pesa to, then these 2 dots would have been the same. But we didn't. The people were choosing whether to sign up for M-Pesa, and so they were inherently different. On the other hand, we asked them, so tell me if anything bad happened in the last 3 months. And we found that when people said that something bad had happened in the last 3 months, they lost their job, the crop failed, whatever, then their consumption was lower. All that says is that bad things are bad, right? So that's not surprising. For users of M-Pesa, if there was no effect of M-Pesa, then we would expect that when something bad happened to them, then that would be bad too, that their consumption would fall as well. So that's our kind of assumed counterfactual. But in the data, we might see something different, this kind of thing, right? So there's slightly higher consumption. And in fact, if we did see that higher consumption than the counterfactual assumption, then we'd say that was the impact of M-Pesa. Right? So that's our identification strategy, if you like. We don't have an RCT, but we're using this simple difference in difference to address, to estimate the effect. So, is there risk? Does M-Pesa allow this improved risk sharing? So it turns out that when households suffer some negative shocks, such as illness, crop failure, unemployment, etc., the consumption of those who do not use M-Pesa, that's those first guys, the non-users, it tends to fall by about 7 to 10%. So we're right that something bad happening does something bad for your consumption. On the other hand, M-Pesa users see no fall in consumption whatsoever, on average. So M-Pesa users are fully insured. And so if we go back to this picture, in fact, our observation is way up there. It's the same as if there was no shock at all. That is unbelievable. I want to stress that that is unbelievable. I mean, but you have to believe it, sorry. I mean, we worked very, very hard on the data. We didn't just do this on the back of an envelope kind of thing. We did it on the back of a mainframe. But the takeaway from this is that having access to M-Pesa effectively gives you complete insurance against these negative shocks. So all of that difficult work we do trying to get people to buy insurance, trying to dress up like a trustworthy guy to get people to buy insurance. Yeah, I don't suggest for a minute that we should not do that. But people are able to achieve such outcomes if they have the technology to do so, it appears, in this context. Okay. So we did some checks, right? And in fact, the first year of data analysis is getting to that point, and the next 3 years is doing the checks to convince people that it's right. I won't bore you with the details of that. But as I showed you before, the agent network was rolled out over time. Okay? So it was widely dispersed and then got deeper and deeper over time. And because we did a series of interviews with the same households, we were able to see how things changed for them in terms of their access to agents. So you could imagine that instead of saying, if you wanted to do an RCT, you might say, I'll randomly give M-Pesa to some people. Well, we didn't do that. But instead of doing that, you could say, I'll randomly put an agent nearby you. And as we heard earlier, having agents nearby is a big part of whether or not mobile money is effective. Right? If your agent is 200 miles away, you may as well be getting on the bus. You have to get on the bus anyway. You may as well go all the way home. So we're able to use this rollout of agents to see how the distance to an agent fell over time for each person in our sample. Effectively, that increases the access of people to M-Pesa over time. And for some people, that increase in access is not very big because they start early on with an agent nearby them. And for other people, there's no change either because an agent never arrives nearby them. But for people in the middle, their status changes, right? Their access to agents increases considerably from early to late. And so we can use that variation. Now that itself may not be random, but we're able to check, I think we said this here, yeah, that variation is not associated in our data with anything that we can, any characteristics of individuals. So it looks like it was as good as random. Based on that, we can say, okay, your access to M-Pesa is changing in some kind of apparently random way. When we use that as a proxy, if you like, for M-Pesa user status, instead of actually using M-Pesa, we turn out to get the same result. Right? The risk-sharing impact is unchanged. And we do a number of falsification tests with earlier data from different surveys and find that before M-Pesa came along, these two groups of people who would turn out to be users and non-users, but of course we're all non-users early on, they had the same exposure to risk beforehand. Right? There was no difference between them. When rainfall shocks, etc., came about, they were both equally affected by these shocks. So our counterfactual assumption effectively was verified that people who turned out to be users of M-Pesa were not able to spread risk before any better than people who turned out not to be users of M-Pesa. Okay. So just briefly, we looked at that, tried to disaggregate a little bit, or more finely look at the types of shocks that people experience. So if you look at non-health shocks, so non-health shocks I think of as being shocks to sources of income, right? So for losing your job, crop loss, etc. Then it turned out that non-users of M-Pesa saw their consumption go down, and users of M-Pesa saw their consumption remain unchanged, as I said before. But for health shocks specifically, they tended to represent, of course, income can go down then if you can't go to work because you're sick, but also consumption needs in effect go up. You need to go to the doctor, you need to spend more money. So it turned out that non-users of M-Pesa, when hit by a health shock, saw no change in consumption. So you think, oh, well, that's good. But in fact, consumption needs had gone up, and indeed, users of M-Pesa saw consumption increase, right? Because they needed more. Effectively, they were able to increase their consumption when the marginal utility of consumption increased. So we've had a little bit of talk about mechanisms over the last 2 days. So how does this work? There are a number of ways it could work. The kind of obvious one that we would immediately think of is remittances. When something bad happens, I call my mum and she sends me some money. I still do that. Soon I'll be calling my kids, but they're not quite old enough. Alternatively, it could be that this device is providing a means of saving. We've heard about women in particular hiding money on their cell phone and storing it for emergencies, which is exactly this kind of story. So it could be that the mobile phone is not being used to increase the efficiency of the informal risk-bearing network, but it's just allowing people to self-insure. That's an option. And the other one is that people with mobile phones, people with M-Pesa, tend to be more likely to have a mobile phone. Maybe they just know about stuff. And maybe they know that the crops are going to fail, and so they make some plans because of that. I'm not sure how that works. Anyway, when we look at the data more closely, it turns out the remittance are the dominant factor. They're more likely, they're more often, and they're more when someone has M-Pesa and is subject to a shock. And there's a larger network. So you can think of, an informal network is a group of people. Typically that's in my village, right? And when the hailstorm hits my village, and that's no use to me, right? Because everyone's in the toilet. Sorry, everyone's had a bad shock. If my network reaches all the way to the coast from Kisumu, then suddenly the fact that the hailstorm hit my village is much easier to deal with. Okay, thanks a lot for your attention. Take a look if you like. Thanks.